week or so, there has been a lot of just massive selling, and that, of course, could be the beginning of the end. We'll just have to wait and see. If we break down below this $47 level, then it's likely that we could drop pretty significantly. Are we at the top and at the end of the trend? Back in 2024, the British pound held its own as it was falling. It was falling slower than most of its contemporaries. Metals trying to find some type of floor. This is Chris from Hola Prime with your technical analysis roundup. The gold market has been slightly positive during the trading session here on Thursday as the market continues to look at the $4,000 level underneath as being a major floor. The market initially fell pretty significantly to reach that level, only to turn around and show signs of life, bouncing after forming a bit of a hammer during the trading session on Wednesday, and now Thursday is more or less sideways. The $4,000 level is an area that is worth paying close attention to due to the fact that we have seen a lot of noisy behavior. This is essentially going to be your short-term floor. If we break down below the 4,000 level, then it could open up the possibility of a move to the $3,800 level. The $3,800 level was the target from the ascending triangle. We hit that and then took off to the upside. A pullback to that area would actually be healthy, but we'll just have to wait and see. All things being equal, this is a market that I think you have to understand that we have a lot of crazy behavior, and I think we were so overdone that the market participants will continue to look at the 4,200 level above as a potential barrier. If we can break that level, then we could go higher, but I think the best thing for gold right now is to simply go sideways. Remember, this is a market that continues to be a lot of noise, a lot of volatility, but you cannot see a market go straight up in the air, break down like this without at least taking a pause. A little bit of sideways action goes a long way here. The silver market is pretty much the same thing. We are rallying a bit during the session on Thursday, but the $50 level above looms large. The $50 level, of course, is a large, round, psychologically significant figure that I think will be a significant amount of resistance given enough time. If we break above there, that would be a very bullish sign. It could open up a move to the $51.50 level. But we market, I think, probably a little overstretched at this point, so it's difficult to get aggressive in the state that we're in. I think a little bit of sideways action ends up being probably the best thing here as well. If we break down below the $47 level, we could get a deeper correction, perhaps testing the 50-day EMA. Ultimately, this is a market that's still in a bullish momentum move and trend, but really after the last week or so, there has been a lot of just massive selling, and that, of course, could be the beginning of the end. We'll just have to wait and see. If we break down below this $47 level, then it's likely that we could drop pretty significantly. Are we at the top and at the end of the trend? It's a little early to call that, but we definitely have the first component of that coming to fruition. The euro has initially fallen during the trading session on Thursday and then bounced a bit in order to show signs of stability. The 1.16 level is a massive area of importance as it is a large, round, psychologically significant figure and an area that's been support and, for that matter, resistance previously. It's interesting to note that the market actually hasn't seen a lot of bullish behavior since the FOMC meeting. So the actual top in the euro was during the FOMC conference, press conference. And as a result, a lot of the so-called known behavior of the markets just hasn't played out the way that people would expect. I do think this tells us something. And what it tells me is the US dollar is going to continue to fight. With this, a breakdown below the 1.1550 level opens up the possibility of a move to the 1.14 level where the 200-day EMA sits. If we rally here, then the 1.17 level could be significant resistance. The British pound, of course, has fallen significantly during the trading session to test the 200-day EMA, but really at this point, the 200-day EMA, of course, is an indicator that people will look to determine the overall trend. If we break down below there, then it could open up a move down to the 1.32 level, which is a significant support region. Any rally at this point in time will end up being a bit of a selling opportunity at the first signs of exhaustion, from what I can see, with the 50-day EMA near the 1.3440 level. All things being equal, this is a market that I think continues to see a lot of volatility, and I do use the British pound as a pretty significant indicator, as the US dollar has been really beaten up by the British pound on the way higher. And even on the way down, back in 2024, the British pound held its own as it was falling. It was falling slower than most of its contemporaries. Because of this, if this pair really breaks down and breaks below the 1.32 level, I would expect to see the euro, the Japanese yen, the Canadian dollar, the New Zealand dollar, the Australian dollar all getting absolutely hammered. I would short the pound at that point, but really, this is an indicator for me. The US dollar has rallied against the Swiss franc during trading on Thursday, but you can see the 50-day EMA has offered significant resistance. The 0.80 level is a large, round, psychologically significant figure, which is an area that a lot of people will be paying close attention to, that as it is previous support and resistance. If we could break above there, then we could go looking to the 0.81 level, possibly even the 0.82 level where the 200-day EMA is residing. I do think that in this general vicinity, we are trying to, at least one way or the other, form some type of bottom. It'll be interesting to see how this plays out. I think ultimately, if we do take off to the upside, it's going to be very noisy. If we drop and break down below the 0.7850 level, then that could be a flush lower. But I think we're in the middle of trying to find our floor. The US dollar has rallied a bit during the trading session here on Thursday, as we are trying to get to the 153 yen level. The 153 yen level is an area that was a swing high, and I think that opens up a possible situation where we are probably going to pull back, but I think there's plenty of buyers underneath near the 151 yen level where it can bounce. If we can break above the 153 yen level, then the 154.50 yen level, all things being equal, we have a situation where short-term pullbacks, I think, offer plenty of value. You do get paid swap at the end of every day, and therefore it pays to hang on to this market. I have no interest in shorting, and every time it pulls back, I look at it as an opportunity. That's how I've looked at this since somewhere in the middle of May, and that, of course, hasn't changed. I think we continue to go much higher as the monetary policy in Japan is about to get a lot looser. The US dollar has been fairly quiet against the Canadian dollar as we're hanging around the 1.40 level. The 1.40 level is an area that's been important multiple times, as we have seen quite a bit of volatility and move to the upside. That being said, the 50-day EMA has broken above the 200-day EMA, kicking off the so-called golden cross. The market pulling back is a potential buying opportunity, as you do get paid to hang on to the position. And I think that probably continues to be the case. Now, some of the most recent Canadian economic numbers have been bigger and better than anticipated, but ultimately, the interest rate differential still favors the US, and I think Canada probably has a whole host of its own problems. That being said, a little bit of a dip and a bounce is what I would be looking for. The Australian dollar has rallied during the trading session here on Thursday as we continue to consolidate around the 200-day EMA. I'm not necessarily overly aggressive here. I think a little bit of a bounce towards the 0.6550 level might be a shorting opportunity. But truthfully, this is basically where money went to die. The Australian dollar, while everybody else has been moving all over the place, hasn't been that attractive. I think short-term rallies that show signs of exhaustion are to be sold into. I don't like buying the Aussie dollar, at least not right now. And really at this point, I think it's just lost. I think that's going to continue to be the main story here, as we just don't have any momentum. The New Zealand dollar is rallying a bit during the trading session to reach the 0.5750 area. This is an area that's been very difficult to break above. We'll have to wait and see whether or not it can actually do it. If it does, then I'm looking right around 0.58 for some type of resistance and selling opportunity. It's clear that we're in a downtrend in the New Zealand dollar, and this has been an extraordinarily deep correction. Fibonacci traders may look at this as a potential move to the 61.8 fib, but really we broke significantly below there. I don't even know if that's what I would be looking at, but it is something to keep in the back of your mind. This market continues to favor the US dollar, mainly due to the fact that there are a lot of concerns about commodity currencies out there right now. And of course, New Zealand is a small economy that is dependent on China and Indonesia, places like that. So we'll have to wait and see what their exports end up looking like. Right now, I think you continue to see US dollar strength in general. The euro has rallied significantly against the British pound during the trading session here on Thursday. The market continues to see a lot of noisy behavior, and ultimately I think this is a situation where we're just kind of stuck. Whether or not we can really take off to the upside is very difficult to imagine. The 0.8750 level is an area where if we can break through there, then the market will go looking to the 150 point gain. This is an opening to the 0.89 level. All things being equal, this is a market that I think continues to see a lot of choppiness. Signs of exhaustion here, I think, would end up being a selling opportunity, perhaps down to the 0.8650 level. The longer term sideways action, I think, probably continues, and it'll be interesting to see how this play out. But if we do break above the 0.8750 level, I'd be particularly interested to see how the euro and the British pound, specifically the British pound, would behave against the US dollar. Maybe that gives you the opportunity to start shorting over there. We do have divergence here over the last maybe 6-ish months. So price rallies, momentum drops. We'll just have to wait and see. The euro has had a day against the Swiss franc. And as we plunge to the 0.9117 level and turned around, this to me says not so quietly that the Swiss National Bank is paying attention to this level. They do not hesitate to get involved at times. So we'll just have to wait and see how this plays out. But I think you've got a situation where traders are looking at 0.92 as a massive floor. We'll just have to see if that ends up being the case. But clearly, somebody with a lot of money is trying to keep this market afloat. And with that being the case, if we can break above the 0.9250 level, then it's possible that we could go looking to the 0.9350 handle. The euro has rallied pretty nicely during the trading session here against the Japanese yen, as we are approaching that crucial 178 yen level. All things being equal, this is a market that I think you continue to buy dips in. I don't have any interest in shorting it, and I think the interest rate differential between the euro and the Japanese yen will continue to favor the upside. But overall, the Japanese yen has struggled to hang on to any type of gains. The Japanese yen is just, without a doubt, one of the worst currencies right now to hold. And I think that the euro yen pair probably has more to do with that than the actual euro. The euro is kind of flat. It's a little stronger against the pound, I guess. But in its biggest measuring stick, the US dollar, it's really not doing much. The Japanese yen, on the other hand, is getting hammered against almost everything. And that is something that you'll see time and time again in this analysis. The British pound rallied a bit during the early hours of Thursday to reach the 1.0650 level against the Swiss franc, only to turn around and plunge towards the 1.06 level. The 1.06 level is an area that people have been watching as it was a plunge and then a bounce from that level. This market is in a roughly 50% support range, and if we can turn around and rally from here and break above the 1.0675 level, then maybe we can have a run to the 50-day EMA right around the 1.0730 level. If we can break above there, then we could really start to take off. If we break down here, watch that Euro-Swiss currency pair, because if it starts falling apart, that's what triggers the Swiss National Bank into getting involved and start shorting its own currency, because a strong Swiss franc really hurts its exports into the European Union, which is 85% of its market. Going back to the yen, you can see that the British pound has rallied a bit, but it looks much like a market that jumps, pulls back to find support, and then bounces again. At this point, maybe the British pound goes looking to the 205 yen level, but I think it's going to be very noisy due to the market is going to be a grind higher, not necessarily a bigger move to the upside. If we break down from here, the 50-day EMA is sitting right around the 200.5 yen level, and then again at the 200 yen level. Ultimately, this is a market that I think will continue to be sideways and leaning to the upside. Remember, you get paid to hang on to the British pound against the Japanese yen, and that is a major factor here. I have no interest in shorting. Really, at this point in time, the market is one that you are either long or you're just on the sidelines not doing anything. Short-term pullbacks, again, I think offer plenty of opportunity. The Canadian dollar has rallied against the Swiss franc during the trading session, but it looks like the 0.57 level is going to continue to be a bit of a problem. The shooting star forming for the day does tell you that there is a bit of resistance above, and of course we also have the downtrend line and the 50-day EMA coming into the picture. We're in a downtrend. I think all of this sets up for a fade the rally type of situation, and we may be getting that candlestick as I record this video. If we were to break to the upside, we need to clear the trend line and maybe even the 50-day EMA around the 0.5750 level. A move above there then opens up a bigger move, but really at this point in time, I think you still have a situation where the market will continue to see quite a bit of noisy behavior, but mainly to the downside. The Canadian dollar has rallied a bit against the Japanese yen, but again, this is the Japanese yen we are talking about. The Japanese yen itself is extraordinarily weak, and I think that continues to be a major problem in the currency markets for the yen. It's not just the US dollar that's beating it up. It's also weaker currencies like the Canadian dollar, which, quite frankly, I don't know that anybody wants to hold at the moment. So, with that being said, the market is likely continue to see where there is quite a bit of volatility. I think short-term pullbacks will end up being buying opportunities, and a pullback towards the 107.50 yen level is right here around the 50-day EMA, which is pushing to the upside, and that could offer a little bit of a floor in the market. The market breaking to the upside has to deal with the 110 yen level, but really the 110 yen level is an area that a lot of people will be watching closely, as it is a large, round, psychologically significant figure, and an area that if we break above there, we really will see the yen weaken. The euro drifts lower against the Norwegian krone, and this, I think, has more to do with oil, which we'll get to a little later, as the Norwegian krone is an oil currency. Notice, though, we are sitting right here at support and 11.56 or so. And at this point, we could see a bounce. If not, then the market probably drops to the 11.45 level. This is a pair that's difficult to trade at times. It's almost solely dependent on the European economy and what's going on in oil. The euro plunged against the Swedish krona during the trading session and broke down below the crucial 10.88 level, only to turn around and show signs of life. By forming a bit of a hammer, it suggests that maybe the market will continue to look at this as a floor. All things being equal, we have been in a trading range between 10.88 and 11.08. The 50-day EMA is likely to continue to show quite a bit of resistance. If we can break above there, the 11.08 level is your next barrier. Anything above there would be pretty strong, but really this looks like a fade the rally type of scenario on signs of exhaustion. The New Zealand dollar rallied significantly during the trading session on Thursday, breaking above the 200-day EMA. The 200-day EMA should at least be paid somewhat attention to, as it is a major trend determining indicator, but it's worth noting that it is flat, so we'll see if it starts to curl in one direction or the other. The 88.50 level is an area that you would expect to see a lot of resistance. If we can break that, then we can really take off to the upside. Keep in mind that the New Zealand dollar, although weak, is not the Japanese yen, and that helps. The New Zealand dollar has rallied a little bit against the Swiss franc during the trading session, which, of course, is a market that is very sensitive to risk appetite. The New Zealand dollar, of course, is a currency that people buy when they feel like taking risk, and the Swiss franc, of course, is a currency when people are feeling a little risk averse, they start buying. The 0.4550 level is an area that could be a little bit of support. If we break down below there, then the market could really take off to the downside. All things being equal, it's really not until we break above the 0.4650 level that I would consider maybe taking a long, but if I am going to short the Swiss franc, buy a Swiss franc denominated pair, I probably would be buying the US dollar, all things being equal. Speaking of the US dollar, it is shrinking a bit against the Mexican peso, which of course is a positive sign for risk appetite, as the Mexican economy is the largest economy that exports to the United States. It's the biggest exporter to the United States. So this is an indictment on how the U.S. economy may be behaving. If the Americans are buying things, they're buying a lot of Mexican things. That's what you need to keep in the back of your mind here. The 50-day EMA sits at the 18.50 level and offers a little bit of a barrier, but we also have a trend line there. And of course, 18.50 previously has been significant support, and it should end up being significant resistance. If we break down from here, the market could go looking to the 18.20 level, as it was the previous support level. All things being equal, this is a market that I think, given enough time, probably has to really kind of sort things out. If we break down below 18.20, I suspect we go to the 18 level over the longer term. The U.S. oil market has exploded to the upside, although it is giving back some of the gains. The market, of course, is reacting to new sanctions against Russia, but quite frankly, I think you've got a situation where it's going to be difficult to get overly excited about that because we have a long history of sanctions against Russia, and yet somehow they still sell oil. I don't think that changes things, but you do have to keep an eye on what's going on in Venezuela because all of a sudden, the U.S. military has shown up. So are they going to overthrow Maduro? If they do, is it going to be a regime change that allows the flow of oil? Longer term, that could be extraordinarily bearish for oil because it opens up Venezuelan oil to the rest of the world. It'll be interesting to see how this plays out, but after this type of move, I expect to see a bit of a drop, and given enough time, it probably does. A 6% gain at one point during the day, of course, is a bit much, but as you can see, oil does get very volatile suddenly and then just chops around. I think at this point we need to see how we behave over the next couple of days, because if we do get somewhat negative over the next couple of days, that could tell you everything you need to know, and we probably continue to drop. NASDAQ 100 continues to rally, and we have seen another attempt to break out during the trading session here on Thursday, but the question is, can we break above the crucial 25,250 level? If we can, that would be a very good sign, and we could continue to go much higher. Regardless, I think short-term pullbacks open up the possibility of value hunting, and I think people dropping the NASDAQ from here will only have others looking at it as an opportunity to pick up what has been a very strong uptrend. Market participants continue to flood to the same names as per usual, and that, of course, has a major influence on this market. We have the 50-day EMA and an uptrend line that we need to pay close attention to, which so far has held quite nicely since May. The S&P 500, of course, looks very much the same, as we are trying to break out to the upside yet again. Ultimately, I think this is a scenario where, given enough time, we do break out. Short-term pullbacks continue to be buying opportunities, and I have no interest in shorting. We have the 50-day EMA and the uptrend line both offering plenty of support, which, as things stand right now, are all the way down to the 6,615 level. So a long way to go before we even remotely see bearish behavior. The Dow Jones 30 is continuing to look very bullish. And ultimately, if we can break out to the upside, you have the 47,200 level paying close attention as resistance. So that should be your target. And then eventually a sign that once we break out, you can really start to jump. Ultimately, short-term pullbacks open up buying opportunities, especially near the 50-day EMA. Bitcoin, of course, has rallied for the session, although I wouldn't read too much into it yet. It's a scenario where traders are looking at this through the prism of trying to sort out whether or not risk appetite can return. And remember, Bitcoin is highly sensitive to risk appetite, so you definitely need to be cognizant of what people are starting to bet on in general. As things stand right now, it looks like Bitcoin is at least trying to defend the $108,000 level, which of course is a good sign. And then you have the $105,000 level underneath, perhaps offering support as well. So maybe we should make a line there as another potential short-term floor. I think right now we've got more sideways action than anything else. Ethereum has rallied during the trading session, but it looks like it's shying away from the $4,000 level, at least so far. And this, of course, is a sign that maybe traders just don't have enough momentum to break out to the upside. I recognize at this point that it's likely the Ethereum market is just going to take its cues from Bitcoin. And right now, we're just kind of stuck sideways. Generally speaking, the U.S. indices continue to look very strong, and I don't think that changes easily, although we may get the occasional shock to the system. It certainly wouldn't take much for a Donald Trump tweet to get the markets freaking out. That being said, these are short-term concerns. These are not longer-term issues, and therefore I think ultimately the U.S. stock market is a place to be. Precious metals are now trying to figure out whether or not that sell-off was a real thing. I think it was. We'll see whether or not they can break out to the upside. Oil is extraordinarily volatile, but at the end of the day, most of the reasons that made oil so bearish are still out there. So I don't know if that's changed. The US dollar continues to be stubbornly strong, and I don't see that changing either.
Hola Prime, trade with transparency.